Hi stock investors, JJ here, welcome back. Well, today I'm going to react to Jeremy Siegel, professor from Wharton, who talks about economics and the stock market. And today he's saying you're not going to get value moving until the Fed drops rates. He's talking about value stocks, which have been lagging, whatever value stocks are. I've talked about that before. Value is a part of growth. Growth is a part of value, as Warren Buffett says. Anyway, let's get into let's get into what Jeremy Siegel's saying.
Is Jeremy Siegel. He is Professor Emeritus of Finance at the University of Pennsylvania's Wharton School of Business. He's also the chief economist at Wisdom Tree. And Jeremy, what are you anticipating? What are you expecting from this number today?
I actually expect that the year over year is going to be a little hotter than in expectations. And I'll tell you, because we already got the first quarter PCE consumption. So if you kind of work backward from the data we got yesterday, they did revise it upward. It will be a little bit hotter. However, forward looking, I think inflation looks very, very good. The month over month numbers might be on target. We might be 1/10 higher on the other. So I don't think it changes the narrative at all that, Jay Powell's going to tee up a rate cut for the September meeting.
That is the narrative at the moment, that a rate cut is coming in September, that it's going to be teed up by the Fed soon, and then the market will react to that. Forward looking, it's arguably already reacting to it because inflation CPI came in softer and small cap stocks went up. Let's just have a look at that. We can see here just in the past month, we can see that the small cap index, the Russell 2000 index, is up really close to 12% there, and the other indices have lagged for that time. The Nasdaq is down to 3.68%. The S&P 500 is up only 0.34 over that time. But if we go back to the year to date, we can see that, look at that, it's converging. It was lagging. The small cap index was lagging. And speaking about value, we can see that small cap value, which this one is here, this is an ETF that's small cap value, and I'm not advising, suggesting, recommending buying anything or selling anything. You've got to do your own work on that. This is just an observation about what's going on. This one's actually run by Tobias Carlisle, who is on Value After Hours podcast. He has guests on there. If you follow this channel, you might know about that already. So in the last month, it's gone up 12.28%. And for the year, well, you can see that spike there. So this is small cap and value. And he also has a larger cap. I think this is more of a mid cap, really, where it's deep value. And the same thing has happened, 10.33% over the past month. And it's a spike. It's having a decent year, 14.36. And that is actually matching close to the S&P 500 for the year. So anyway, that's the backdrop. And so Jeremy Siegel was kind of saying here, well, he's about to say here, well, that's another video. He's about to say here that he doesn't think value will move. And clearly it actually is starting to move. Maybe he thinks it's a short-term thing.
After this next one.
Yeah, next week when the Fed meets again, even if it's hotter, you don't think that will make his rhetoric or what he says any more hawkish?
No, I don't. I actually don't think so, because, again, forward-looking numbers, I mean, we really take a look at commodity prices. Even oil prices have come down. Those are very sensitive prices. So what? Home prices, rental prices, we're beginning to get the rental price index, which we know is lagged in the official data. We're getting to see that really come in at a much lower rate. So, and that's all great news. So I think that won't change the narrative. Now, he's not going to promise anything. Of course, he said if trends continue on the direction that we see, we would be amenable to easing financial conditions at our next meeting. And it's certainly
easing financial conditions, code for, well, not even really code for lowering interest rates. The market is anticipating this, as I said, this rotation to small caps, but the mega caps have gone down, so that complicates it. It's not, so far it's not a broadening out of the market because those mega caps have come down. It's more of a, we could say, not quite a correction in mega caps yet, but it got close to 10%.
He's not
for NVIDIA, it got way over 10%, that correction.
To commit how much it's going to be, but I think that's definitely what's going to be the setup next week.
And you think the Fed should be cutting right now?
I mean, if it were up to me, looking forward, they should be. I mean, I think ultimately the Fed.
Okay, so he thinks they should be cutting. So that could be good for portfolios, not investment advice, of course. But if the Fed starts cutting rates, it will be interesting to see what happens to the stock market, whether that's more favorable. It's forward looking. So if there's a rate cut, well, it's in preparation for a rate cut now with small caps, as I said. And speaking about portfolios, I want to tell you that I have partnered with ShareSite as an affiliate to give my community, my viewers, a special offer here. And I'm going to put a link in the description to this ShareSite page here where you can find out all about it. ShareSite is a portfolio tracking and reporting tool. So if you have brokers in different places, different assets, not only stocks, then you can use ShareSite. I use ShareSite. I wouldn't recommend anything that I don't use myself, and I think it's really good. So to track investments, it helps you with tax reporting. As you can see, powerful investment performance and tax reports. You can visualize your portfolio in different ways there, track all of your investment income. So I find it really good. And I'm going to, as I said, I put a link into the description of that. All right, let's get back to Jeremy Siegel. That's not Jeremy Siegel. That's Steve Eisman from The Big Short, and I will do a video about him on the other channel, The Art of Value, I think, at some point, talking about the psychological rotation that's going on that I pointed out with small caps.
Funds rate should be 3.5 to 4. Now, I'm not saying get there tomorrow or get there by the end of the year, but we're at 5.33 now, so we're about 200 basis points, almost 200 basis points above that neutral rate, which actually the Fed actually thinks the neutral rate is even lower than that. I think it's a bit higher, but I think we should really be moving towards that direction when we look at the trends in the economy. I mean, GDP is holding up, but at a moderate rate. So the labor market is no longer a tightness that they have to be concerned about, and basically it's forward inflation, and that looks very, very good to me coming from the data that I research.
So he does think that inflation's coming down the way the Fed wants it, so that does imply that rates are going down. And if the economy comes in lower, if that starts to go downhill, that does imply that rates would come down then too. Why would they put rates up in that case?
Let's take a look at what we've seen in the markets. There have been some big rotations over the last several weeks and even last several months. One of them is this move towards small caps away from the big caps. The other is this move towards value over growth. Yeah, and actually, both of them are tied together quite strongly. I mean, we had up until about 2.5 weeks ago, we had a month period of one of the strongest growth pushes relative to value that I've ever seen. And then in just 2 weeks, pop, it's gone. It's sort of easy come, easy go. But if you take a look at the long-term trends, actually, growth versus value is back to that trend before we had that pop bubble. But as I said many weeks ago, you're not going to get value moving until the Fed drops rates. And more when you see that, rate drops are in the cards for the Fed, I think that narrative could very well continue. Now, I think there might be a little bit of a bounce back for tech because it certainly has taken a big pounding recently. But you do see a narrative change. You even see a narrative change about is AI as big as we thought it was? Right. I mean, that feeds into the other situation. So, this really could be a watershed in terms of a trend that we've seen for many, many months, if not many years, of growth beating value.
There you go. That was it. That's what he said, that there could be a turnaround here. He's not saying that it's happening too much. It clearly is happening right now, but it hasn't lasted in the past when we've had these small periods. But it's been a big jump, a record breaking with small caps anyway, and value growth versus value. He said there could be a rebound in tech, and that does seem to be happening. But as I showed you that graph of it converging, those two lines there are small caps and some value converging up to where the other indices have been, with if you take Russell 2000 and these ETFs as any indication. But he says it's not really going to take hold until interest rates come down. What do you think of that? Let me know in the comments what you think of that. Do you think that Jeremy Siegel is going to be right about this? And on screen now, I'm going to put a link to a YouTube video that YouTube thinks that you should watch next. It's pretty good, the algorithm at choosing this. And don't forget this share site link, referral link in the description too, if you want to do that. And I'll put a link in the description. This is a relatively new channel, and do follow along. There'll be much more here to come. Thanks for watching, and I'll see you in the next one.